Coming up on Business Incorporated. Rising freight rates put heavy burden on grain importing nations in Africa and Asia. The International Monetary Fund creates new lending facility to cushion member states from economic shocks. And the World Bank keeps Egypt's real GDP growth at 5.5% in 2022. Hello and welcome to the program. I'm Ladi Williams. First off, let's kick off with the markets. They're open today. Begin with African markets where sentiments were negative at intraday. Nigeria's main index was down 0.07% after resuming from the Easter break, while South Africa's GSE was the lone gainer among the markets that we track on the continent. It gained 0.83%. Also on the continent, Egypt's benchmark dipped by 0.78%, while Kenya closed negative before the Easter holiday, lost 0.19% Thursday last week. And over to the Middle East, where major indexes traded mostly mixed. The Abu Dhabi main index fell 0.38%, while Dubai's index was higher by 1.64%. Same time, within the region, Saudi Arabia's main index went down by more than 0.5%, while the Qatari exchange traded in positive territory, up 0.56% at intraday. All right, now let's head on to Europe. It's all about economic projections right now, and most countries are being downgraded, this time with geopolitical tension, rising global inflation. Let's see what's happening with Chelsea Delaney right there in Europe. Great to have you, Chelsea. So World Bank has lowered its 2022 growth outlook with Europe's prospects, taking a harder hit. Walk us through this downgrade.
So the World Bank has basically cut its growth forecast by a full percentage point. It said it now expects the economy to grow by 3.2%. Previously, back in January, it had been expecting 4.1% growth. And I'd note that also marks a really big slowdown from last year when growth was almost 6%. So we're basically talking about halving of that GDP. And of course, much of this has to do with the war in Ukraine. Looking at the World Bank forecast, a lot of this downgrade is coming from the worsening situation in Europe, and some of the numbers are really devastating. It expects the Ukrainian economy, for example, to contract by 45% this year. The Russian economy is going to get hit less hard than Ukraine. They're saying they expect an 11% contraction, but other countries in that area, for example, Moldova, Belarus, are also expected to contract. The outlook is a bit better in Western Europe, though growth is also definitely slowing down here as well. The World Bank is not necessarily calling for economies to contract in, say, Germany, but growth is going to be anemic at best as we face higher inflation, particularly high energy costs as a result of Russia's war in Ukraine. What was also really interesting from the World Bank is how officials are really stressing how uncertain these forecasts are. They say that they may have to downgrade their projections again in the future.
Well, quite interesting. But how's this going down with investors?
Well, this forecast from the World Bank, I think it's definitely going to add to those concerns about recession for European investors, as well as the concerns that we've seen for months now about stagflation. Eurozone indices definitely fell at the open today, so that concern is there. And European stocks have already been hit quite hard this year. The benchmark German index, the DAX, for example, is down about 10% this year. If you compare that to the Dow Jones Industrial Average in the U.S., that's only down about 5%. And so there definitely is concern here. And while we do see some economists, particularly the European Central Bank, is still expecting the Eurozone economy to grow in the next few years. Investors are starting to doubt that. They are going a lot more pessimistic. Deutsche Bank, for example, has been one of the first major banks to call for a recession. They say the euro area will face recession in the next 2 years because of this rising inflation. And on top of that, they're saying that stocks here in Europe could fall by 20% starting in late late 2023. And even in the more near term, if Russia does follow through on threats that it's made to cut off energy supplies to the Eurozone, many countries here like Germany would face an immediate recession. So investors either see an immediate recession, a recession a year from now, or the possibility of stagflation, and none of that is really a good case for markets here in Europe.
Right, and but meanwhile, the EU is discussing plans to pay for the reconstruction of Ukraine. What more can you tell us about this?
So the European Commission has reportedly told diplomats that it is planning to establish what it's calling a solidarity trust fund to pay for the rebuilding of Ukraine. The effort is still in the very early stages, and of course, war is continuing in Ukraine, so it's very difficult to sort of aggregate the cost of how much this would be. But from what we know, according to a Bloomberg news report, is that EU countries have been told that they should expect to pay most of the costs for Ukraine reconstruction. They say they expect it to cost hundreds of billions of euros over the coming decades. The Ukrainian government itself has estimated the cost of the war at about $1 trillion so far in terms of the damage it's caused to critical infrastructure, to all sorts of things in Ukraine. The EU fund could potentially be modeled on the landmark 750 billion euro COVID-19 recovery fund that the bloc introduced during the pandemic to help economies recover. This split the money that they gave to countries between grants and loans. One of the big challenges that EU officials are going to be facing is how to sort of corruption-proof this money. Corruption has long been a problem in Ukraine, but ultimately EU members say if they do go forward this, it could actually help Ukraine's case for joining the EU as they put in place these oversights, these checks that a lot of EU countries have been calling for in Ukraine for a long time.
Corruption proofing, quite interesting. That was Chelsea Delaney right there in Berlin. Thank you so much, Chelsea. Now let's look at what's happening in the UK. It's all about rising energy costs. We have Juliana right there. Great to have you, Juliana. Well, energy bosses have warned of significant increase in the number of British houses falling into fuel poverty in the coming months amid, rising energy bills. Tell us more about this.
Good afternoon, Laddie. That's absolutely right. We've had bosses of Britain's biggest energy firms speaking to a cross-group of MPs on the Business, Energy and Industrial Strategy Committee, and they've been looking forward to October, when we know it's very, very likely that the energy regulator, Ofgem, will once again increase the energy price cap. It's only been a couple of weeks since bills were increased by 54%. And these the discussions today haven't been the first talking about fuel poverty. Charity groups and opposition MPs were speaking about this months ago, and it really is becoming a huge issue here, particularly because of the way the system works in the UK. If you have a prepaid meter, so basically you've got a card or a key, you pay for your energy before you use it, you end up paying so much more than those who are on direct debit. But then because of the nature of direct debit, it's usually people that are more well off that get to use direct debit. So lots of these bosses have been calling on the government today to do so much more to help those who may suffer from fuel poverty by creating some sort of a social fund where £1,000 is reduced from that bill and it's paid back over 10 years. Now, a lot of the plans that were mentioned today and outlined have already been ripped up by the Chancellor. Of course, so many people were expecting during Rishi Sunak's spring statement would have tried to address some of these issues. There is a £200 rebate. That's not enough. It's only a rebate. People still have to pay it back. But there are concerns that just a few months ago, those who were from less privileged backgrounds were paying £1 out of every 12 to heat their homes and, put fire on the gas cooker, whereas now it's 1 in every £6. So it's a huge issue and something that needs to be addressed, which is why the discussion was taking place this morning.
I guess the gap is getting wider with, all of this rising prices. But Rolls-Royce is to start building parts for its small, modular nuclear reactors in, anticipation of receiving regulatory approval from the British government. How's that looking?
Yeah, that's absolutely right. We're not talking about Rolls-Royce, the luxury car maker. We're talking Rolls-Royce, the aero engine maker, which is really considered to be a top engineering firm in the world with an impeccable reputation for safety and standards. Now, they have started producing these small modular reactors, and what the British government are hoping is that these reactors will take away the dependence on fossil fuels. We know that the British government, led by Prime Minister Boris Johnson, has a plan to make sure that we're net zero by 2050. And it's these sort of SMDRs, as they're called, that are going to help the country get to that. So Rolls-Royce are the first to try and produce them. They cost £1.8 billion. Some people are calling that cheap as an alternative to fossil fuels. But this is the first time that we are going to be using them in this country. So it will take significant amounts of probing by the nuclear regulator. We know that Boris Johnson gave that the go-ahead last month, but the probing is not expected to be completed until 2024. So even though it started already, it's going to take about 2 years. And Rolls-Royce feel that they are going to tick every single box, which is why they've started the production already. However, there is stiff competition. There is a firm called Lead Energy, which is a US energy market investor. Now, they have significant backing by Elon Musk. Elon Musk, of course, has been in the news over the past couple of weeks for other issues. But Boris Johnson and Kwasi Kwarteng, the business secretary, have been pretty clear that they want to make sure that they can award this huge contract to a British firm. So we'll just have to wait and see who reigns supreme out of Lead Energy and Rolls-Royce.
Exactly. We'll keep tracking that one. But how are the markets looking at it today?
Not great. I heard you speaking with Chelsea just now about the downgrade forecast by the World Bank. That has really put investors in London on edge. Of course, it's already a shortened week here, but the FTSE started off in the red and it's firmly there at intraday. The all share is down 0.43%. The FTSE 100 slightly up by 0.36%, but the FTSE 250, the domestic market, down to 0.81%. In the currencies market, the British pound is up on the US dollar by 0.02%, though down on the euro by 0.06%, but up on the Japanese yen at intraday by 1.04%, Laddie.
Well, I keep saying it, not an easy time to be in this market. Thank you so much, Juliana. See you tomorrow.
Thank you.
All right, now let's look at what's happening in Asia. Shares in Asia Pacific were mixed today as investors watch for market reaction to China's central bank announcing financial support for COVID-hit sectors. Hong Kong's Hang Seng Index led losses among the region's major markets. It dropped 2.28% to close at 21,027 points. Returned to trade following holidays on Friday and Monday. Outside the Nikkei 225 in Japan climbed 0.69% on the day to 26,985 points, while the Topix Index gained 0.83% to 1,895 points. South Korea's Kospi rose 0.95%, finishing the trading day at 2,718. In Australia, the S&P ASX 200 advanced 0.56%, closing at 7,565, while MSCI's broadest index of Asia-Pacific shares outside Japan shed 0.35%. Today, we're looking at fruit commodities. One is orange, which is in season almost all year round, but they're particularly abundant in late April, early May, and December. One of the most widely consumed commodities in breaking fast. And given that we're in the middle of the Ramadan period, demand for this commodity is on the rise. Let's talk to Bimbola Adigun, analyst at financial derivatives company. Great to have you on the program.
Thank you for having me.
Yeah, so Nigeria is estimated to have a Muslim population of about 50%. How is supply expected to hold up, in the face of elevated demand due to the ongoing fast?
Okay, so Muslims usually break their fast with water and fruits, and most of them use oranges. I like to believe it's because it's relatively cheaper than other fruits, right? But this period in which Ramadan is, it's not really the period where there's a lot of orange in supply. So this means that there will be more demand than supply. This would lead to a supply deficit. And once there's a supply deficit, it could push the price of oranges to go up. or those that can afford the orange at that price would shift to other substitutes like mangoes or bananas or watermelon, in fact.
And, we've seen the prices, skyrocket by as much as 47% in the last 12 months, from about 1,800 to 2,500 naira per basket. But, food inflation sits at 17.2%. Why are the prices of, oranges increasing faster than the general level of food inflation?
So inflation is the increase in inflation right now is not necessarily because of orange. It's based on increase in price of certain items in the food inflation baskets. These items would be wheat, cereal, potatoes, yams, even fish, oil, and the like. So it's the increase in these prices that has led to increase in inflation. And then additional increase in costs and transportation costs would have led to an increase in inflation. Let's look at February, when there was a fuel scarcity. This led to the price of diesel hiking up to like 650 naira per liter. And the trucks that transport these commodities are diesel fueled. So moving it from the farm to the retail, to the markets and all, is also an additional cost. So this would be like the cause of inflation. However, if we're looking at oranges, like I mentioned earlier, there is a supply deficit, hence the increase in price. And these oranges are also transported from the farm to the market, and the transportation costs would be included. So hence the reason why there's an increase in price of oranges as well.
Yeah, but, with the increase in price, we know that at this point, household incomes are being squeezed. Is that playing into the pricing at all?
Yes, you can. I can say that, because if you don't have enough, if you're still trying to squeeze in your money to pay for the essentials, and then they are still increasing the price of the oranges that you're going to use to break your fast, the next thing to do is to look for something cheaper that would be relatively substantial to breaking your fast as a Muslim. And
we're seeing, most fruits also, prices of most fruits actually go up at this point. So I'm wondering what the substitute is at this point. All right, so let's look at another issue. Now, the total production of citrus fruits in Nigeria is estimated at about 3.98 million tons, in 2020, and they're initiative to increase the output. Are there enough plans to preserve, and package oranges for off-season period?
So there's a citrus research program going on that is aimed at increasing the efficiency of production of citrus in Nigeria, making it affordable and making it available all year round and affordable as well. But then there are still some issues that we would need to address before this can be in full effect. Let's say we would need cold storage facilities, but then we would need power for that. We don't have that. We would need finance for these infrastructures or these facilities. We don't have that. The proper handling of the fruits during harvesting and transporting, the use of fertilizers, all of this, we don't have that yet. So until they are properly, until these problems are properly addressed, before this we can fully harness into this new program, and then it will even reduce import bills and save the country some money.
I guess a lot is playing into all these prices. Thank you so much, Abimbola Adigun, analyst at Financial Derivatives Company. It's great having you. All right, now let's look at other stories. We see our reports show the war in Ukraine will put further pressure on grain importing countries in Africa and Asia. The reduced number of vessels for delivering cargoes drives up the shipping rates. According to the head of the International Chamber of Shipping, about 80 to 100 ships, mostly bulk carriers, have been unable to leave Ukrainian waters for almost 2 months due to underwater mines and military blockades. ICS says this will have repercussions for poorer countries in Africa, which cannot afford to pay huge amounts for their grain. Russia's war in Ukraine has thrown the $120 billion global grains trade into disarray as deliveries from the Black Sea breadbasket region gets increasingly complicated. In addition to the situation in Ukraine, freight rates are also being affected by China's efforts to battle the spread of COVID-19. Hundreds of bulk ships facing delays off China's coast. The authorities in cities, including Shanghai, are locked down cities. An International Monetary Fund has created a new lending facility to help build resilience of its member countries against economic shocks. The facility, dubbed the Resilience and Sustainability Trust, becomes a third pillar of the fund's lending toolkit after the General Resources Account and the Poverty Reduction and Growth Trust. Comes into effect on May the 1st and aims to build a fund of at least $45 billion in resources to help build resilience against long-term risks to balance of payments amongst member countries. The facility seeks to provide policy support and affordable longer maturity financing of 20 years with a 10.5-year grace period. The RC offers low-cost loans to developing countries with emergency currency or special drawing rights, and wealthy countries will contribute. It will strengthen the impact of IMF's $650 billion SDR allocation implemented last year by channeling resources from economically stronger members to countries where needs are the greatest. And the World Bank decided to maintain Egypt's real GDP growth at 5.5% for the financial year 2021 to 2022. For the 2022-2023 year, the World Bank downgraded its forecast to 5%, down from 5.5% forecast it made in January. World Bank's chief economist added during a virtual event to reveal the bank's reality check, forecasting growth in the Middle East and North Africa in times of uncertainty report. Egypt is the only country that maintained its conjuncture with the group of middle-income oil importing countries. Accordingly, Egypt's fiscal balance is expected to rise to 7.9% of GDP in 2022 on a fiscal year basis, compared with 7.4% in 2021, before slowing down to 7.3% in 2023. And South Africa's Durban Port in KwaZulu-Natal province is one of the major areas affected by the floods. This has caused disruption to the supply chain of goods and services, as the Durban Port is one of the harbors which supplies the rest of the country. Damage to the Bayhead Road, the main access road to the port's container terminals, is substantial, as effectively cut off all the road access in and out of terminals. Rail services have also been affected. Well, President Cyril Ramaphosa, addressing the nation, emphasized how essential getting the port back to functionality is. Had said that the closure of the port will result in significant losses, which will have a negative impact on the economy. Just take a listen.
Floods have caused great economic and social damage. Many of our people have been traumatized psychologically, and they are in need of great socio-psychological help. The Port of Durban, which is one of the largest and busiest shipping terminals on the African continent and which is vital to our country's economic, has been severely affected. Access to the port has been disrupted by extensive damage to the Bayhead Road, which links to the Durban Port operations to the rest of the country. This route handles some 13,000 heavy vehicles per day. The damage caused to businesses in the area have not been fully quantified, but assessments so far suggest that the eThekwini Metro accounts for nearly half of all reported damage.
South Africa's President Cyril Ramaphosa there giving the update on the flooding there. Well, that's it on the show today. Thank you so much for watching. I'm Ladi Williams. Bye for now.